Let's talk about pre-approvals. We're going to first talk about the definitions because it's very important to define what are all the different terms. We have pre-qualification, pre-approval, conditional approval, broker complete or final approval, and funded file. Pre-qualification. Pre-qualification simply is doing some numbers. It can be as easy as you make 100,000, so you will qualify between 4 or 5 times your annual income, so between 400 to 500,000. That doesn't mean that the guy can go and write an offer and everything is going to go good. You're just trying to pre-qualify the client. You can also do some math with your calculator or with the ratios sheet that we have provided. Basically, you can tell the client a number, but it's all verbally. It's all based on assumptions, and by no means they should write an offer or think that they can qualify for financing based on a pre-qualification alone. What is a pre-approval? For us, a pre-approval means that we get a full application, we review credit, we review income, we review down payment or equity, we review assets and liabilities, we calculate the ratios. The only thing that perhaps we don't have access to would be the property, because we don't know which property they're going to purchase. So once we do all that and we have the physical documents and we are satisfied that all the documentation is going to be good for 1, 2, or 3 lenders to give them an approval, then we issue a pre-approval, but that pre-approval is based on our knowledge or your knowledge and your expertise, okay? Because if you miss something, that pre-approval may be not converted into an approval, okay? Now, what is a conditional approval? Once the clients have submitted an offer, or if it's a refinance, we've submitted an application for an approval, the lender will come back to us with an approval which has conditions, okay? If we submitted a complete package, those conditional approvals should have very little conditions. For example, maybe only a void check and signing the commitment. That will be a very strong conditional approval, because as long as you can meet the conditions, the approval will be firm and complete. But if you have a conditional approval and they have not reviewed income, they have not reviewed the property, they have not reviewed the down payment or any of those, then that conditional approval is very weak, because upon the review of those documents, the lender may say, I'm not satisfied with the documentation and I will cancel that conditional approval. So make sure that the clients understand that a conditional approval means that the approval is subject to the items on the list. And as long as the clients can satisfy those subjects on that list, then the bank will fund. Now, broker complete or final approval, that's where you want to be, where the bank has reviewed all the conditions on the approval and they're satisfied, and you should request a broker complete file, which means you don't have to give them anything else. The client does not have to provide any more documents, any more down payment, any more property. The appraisal is being done. They're satisfied with the property. They're satisfied with everything. And that is a complete file or final approval. Does that mean that I am still 100% approved? No, because if something changes in that approval before funding, the lender has the right to withdraw or to cancel that final or complete approval. And it has happened to me. It has happened that after I have a final approval, the client does something silly, or sometimes the lender does something silly, like, for example, one lender pulled credit for one of my applicants a week before closing, and their beacon score dropped a few points without any of their fault, and those few points that the credit report or the beacon score dropped were enough for the client, for the lender to cancel that approval. And I was in great panic, and I had to go to another lender to seek approval at the last minute. And then funded file. Funded file means everything is over. They got their money, they purchased their property, they refi their property, the transfer is done, wherever it is, and you get paid. Still then, liability is still there, because any lender can come back and and audit you or review your files post-funding, but that's very, very rare. So this is the part of definitions. Now, on pre-approvals, do lenders do pre-approvals? No, okay? Very seldom a lender will do a pre-approval. The reason behind that is because it's expensive. In the past, lenders used to do pre-approvals, so they will review the income documents, they will review the down payment, they will review as much as they could, they will review the credit, but they figure out very, very fast that from the pre-approvals that mortgage broker were sending, I think it was only less than 15% funded. So it was very, very expensive for the lenders, so they stopped. So they don't do pre-approvals. If you build up a very good relationship with one particular lender, maybe you're sending them 2, 3, 4 files every month, you can request a one-off from your underwriter. So say, hey, on this file, I'm unsure about this and this. Can you pre-approve this file for me? It will really mean a lot to me. And maybe they will do one-off, but they will not do it on a regular basis for all your clients. So short answer, do lenders do pre-approval? No. And it's not at the broker channel. The branch channel, the mortgage specialist channel, they don't do it either. Very seldom. Sometimes they do, or sometimes they have promotions, but I don't think long-term they do it because it's expensive for all the lenders. Now, the second question, frequently asked question, is what is a rate hold? Rate hold means that you can book a rate with the lender, so you can guarantee a rate with the lender for the next 3 or 4 months, okay? Rate holds are very important when rates are going up, because if you secure that rate on a fixed term, especially on variable, you can do that on variable as well, because you do a rate hold on the discount below prime. But there is more often done on fixed rates. So when you do a fixed rate hold, if rates go up, the clients are protected. If rates go down, you can always ask the client to give them the lower rate. Now, because lenders are having 3 or 4 months to do a rate hold, usually the rate holds are at a higher rate. They're not at the promotional rates that most lenders have. So you can expect 10 to 15 basis points over regular rates for a rate hold. Does that mean that the client is going to get that rate on a rate hold? Perhaps if rates go up a lot, that is going to be a very good rate 3 or 4 months down the road. But if they do an offer, let's say 1 or 2 months down the road, and rates are the same level or even lower, it will be best to just give them the regular rate and not the rate of the rate hold. All lenders do rate holds. All lenders do rate holds, and at what rate? As I said before, they don't do rate holds, and at what rate? 10 to 15 points above the discounted rates that they give for a live application being sent today to a lender. Should I do a rate hold for a client? I would say yes, you should, especially if the tendency for rates to go up. If the tendency for the rates are to stay the same or to go down, then it's not worth too much, that rate hold. In any case, you should keep a list of all your pre-approved clients, because if you see a trend in the market, a swift in the market to go towards increasing rates, then you should go and book rate holds for all of them. Does it hurt my funding ratios or relationship with the lender? No, it does not. At this time, rate holds does not hurt funding ratios or relation with the lender, because all they do is you submit a pre-approval, but it's going to be a rate hold. In Velocity, you will see that it's pre-approval or Filogix, but it's actually a rate hold. The lender do not review the file. They just review that the query report has a good beacon, and then they just give you your rate guarantee. But by no means that means that they have reviewed the income or the down payment or anything at all. And it does not hurt your funding ratios. Now, not all lenders do rate holds, just some of them. So just ask our office or ask myself, and we'll tell you which lenders do rate holds and which lenders do not even do rate holds. So they don't do pre-approval and they don't do rate holds. A lender in my market is promoting pre-approvals. How do I respond? Oh, great. You just respond that you do pre-approvals as well. Okay. Is the typical response that I do which seems to work very well for me, is I do a blanket pre-approval, which means, Mr. Client, that the pre-approval that I'm going to do is not with one particular lender. It's with several lenders. Why? Because at the time that you make the offer, I want to come back to you and we'll review the details of every single offer, and then you can decide which lender you want to go. I don't want to right now 1 month or 2 weeks or 3 weeks before you make the offer to commit to a lender, knowing that in 2 or 3 weeks or 3 months or 4 months, you may the rates may have changed. Maybe there's a promotional offer at another lender and you could have gotten a better deal someplace else. So yeah, we do pre-approvals. They're blanket pre-approvals and they're based on the documentation that you send me. So please do send me all the documents complete that I request when you start the pre-approval process, and fill out the application entirely and pull credit to review that the credit is in good standing and the ratios work. You should do your numbers. You should know if the ratios will work with the particular lender that you're going to submit that file when it becomes live. Now, how good is a pre-approval? The pre-approval is as good as your knowledge of the lender. If you don't know much, it's better that you submit that file for pre-approval, so for review under Learn Lab. If you are sending the file under Support Lab or Direct Lab, is basically up to you, up to your level of expertise and how much you know the guidelines of the lender and the broker kit from that particular lender or lenders where you intend to submit that file. So the pre-approval is as good as your knowledge. Have in mind, it just happened to me after 15 years of experience. I did a pre-approval, everyone's good to go. And when I submitted the file, the lender had another rule, which was not in the broker package. In that particular case was that for that particular city that the client bought in, they didn't do 80% loan to value anymore. They would only do 65% loan to value, which was shocking to me. But you learn every time. And then I had to do something else and change that on the fly. So be careful, because pre-approvals does not mean that people are 100% guaranteed an approval. I know that some mortgage professionals would say that they're good to go, that there will not be any issues. I would never say that. I would say that there's a high probability that you're going to get the approval. We'll run, submit the application for approval when you have a live purchase. But things can happen, but don't worry, Mr. Client, we have your back. So we have several lenders that at this point will give you financing based on our knowledge and our expertise. So next, frequently asked question. So am I approved 100%? With a pre-approval, I would never say that you are approved 100%. If you have a lot of expertise, I would even give them a number. Sometimes I say, hey, this pre-approval is very strong. I would say you're 90% there. But we still have a 10%, we leave a 10% because we don't know things that are out of our control. Nobody is 100% approved with a pre-approval. People who think that way, they're always taking a risk, whether they know it or not. They're taking the risk that they think they're 100% approved and they're not, because the lender will review and they have the right to withdraw financing at any time prior to closing if something changes or if they find additional information that they were not aware at the time of submission. Can I write a subject-free offer with your pre-approval? Tough question. You always have to say no, that you do not recommend that you write a subject-free offer. Sometimes the market is so hot that people are forced to do that, but the risk should be on the client, not on the mortgage broker. If they decide to do so, it's up to them. When they do it, I make sure that I let them know verbally and in writing that I do not recommend, but that we have a pre-approval in place and everything in their file looks fine for them to get the approval, but I cannot recommend for them to write a subject-free offer because it's not your money. The only people that should write subject-free offers are people who have 100% of the money ready and available for that purchase. Otherwise, it's a risk that perhaps because of the market, the clients are taking. Okay, so enough on pre-approvals. Thank you very much for everybody, and feel free to reach out to us if there's any further questions.